So good to have you join us today on this edition of Business Daily. Coming to you live from Seoul, I'm Jung. We have a lot coming up today, so let's get started with the day's highlights. The latest jump in commodities, including oil, has people wondering whether the global economy is now on road to recovery. We'll sit down with an expert to talk about this. Artificial intelligence is making headlines these days thanks to a historic Go match between Google's AlphaGo and baduk grandmaster Lee Se-dol. So where does Korea stand when it comes to researching and developing AI technology? But first, today marks the 4th anniversary of Korea's free trade deal with the United States. Thanks in part to the FTA, Korea's exports to the U.S. have steadily risen, and its share of the world's largest market has hit a 15-year high. Our Kim Min-ji has this report.
It's been 4 years since the Korea-U.S. free trade deal came into effect. Although Korea's overall exports have been on a downward spiral for 14 straight months in the face of uncertainties at home and abroad, the country's shipments to the U.S. have fared relatively better thanks to the FTA. Last year, Korea's total exports fell 8% on year, while outbound shipments to the U.S. edged down just 0.6%. Korea's share of the U.S. market also reached 3.2% last year, the highest in 15 years. The figure might seem small, but compared to Japan, which does not have a bilateral trade deal with the U.S., Korea has been on a steady upward trend.
The utilization rate of the FTA hit 71% last year, with Korea's shipments of automobile parts and tires posting notable growth. Although the market share seems like a small figure given the sheer size of the U.S. market, it's significant.
As for imports from the U.S., shipments fell slightly last year. While there was an uptick in automobiles and LPG, the overall drop was mainly driven by a slump in imports of grain, stock feed, and medical products. And despite Korean farmers being vocal about their concerns before the deal went into effect, imports of agricultural produce, livestock, and fish from the U.S. fell over 10% last year compared to the year before. Down the line, prospects are looking good for Korean automakers as a 2.5% export tariff was eliminated at the start of this year. Other sectors to benefit include auto parts, industrial boilers, and chemical supplies. But some experts say the benefits of the FTA may be short-lived.
I think it's one-dimensional for us to say the Korea-US FTA is bringing us benefit. That's true. But at the same time, if we think about the future may be heavily affected by how other countries behave and excel in the US market because they are competing with the Korean exporters in the US market.
Experts say it's important that Korea positions itself well in the markets it already has a presence in before its competitors gain a stronger foothold. The Korean government has vowed to actively seek new trade deals to boost the country's ailing exports, as well as thoroughly review whether to enter the mega Trans-Pacific Partnership deal that involves 12 other countries. Kim Min-ji, Business Daily.
The Bank of Japan decided to stand pat on its record monetary stimulus policy as it looks to wait and gauge the impact of its negative interest rate policy announced in January. BOJ Governor Haruhiko Kuroda and his board left the benchmark rate unchanged at minus 0.1%, while keeping the annual pace of asset purchases at 80 trillion yen, or roughly $700 billion. It was a widely expected move by market analysts. Still, Japan's central bank emphasized once again that there could be more easing if necessary, especially to reach its 2% inflation goal. It added that the country is on a moderate pace of recovery, but said it would be as a trend, suggesting a dimmer outlook on the economy. So the 5th and final game of baduk between AlphaGo and grandmaster Lee Se-dol is underway. The match, dubbed Man vs. Machine, has garnered global attention as it showcases just how far artificial intelligence has come. And our Eunice Kim takes a look at AI here in Korea.
A snapshot of what appears to be a rose. Uploading the image with the question, "What is this flower?" is immediately followed with an answer, ranunculus. The computer reached this analysis through an earlier study of hundreds of flowers.
판교역에서 김포공항까지 지하철로 가는 길.
Voice recognition technology that once only responded to standalone words has evolved to recognize sentences too. It's a matured version of this machine analysis called deep learning that Google's AlphaGo put on display, surprising the world audience with its earlier strengths when it beat baduk or Go grandmaster Lee Se-dol. Artificial intelligence is an area global companies like Google, Apple, and IBM are pouring their resources into, whether it be around-the-clock research or acquiring companies, as its scope expands to automobiles, medicine, and finance. Korea also has its eyes on AI with an emphasis on the internet, but it's still evaluated to be in the stage of lab experiments.
We're conducting research into services that do not work well yet, but would offer users more comfort once artificial intelligence is applied.
The Ministry of Science, ICT, and Future Planning puts Korea's technology gap in artificial intelligence behind those of Europe and Japan, and a full 2 years behind that of the United States. With this in mind, the ministry plans to open a dedicated research institute next month, into which it will invest 30 billion won, or about $25 million. Also emerging as an urgent task is deregulating areas touched by AI.
To encourage companies to actively invest in the AI market, we need to improve a lot of regulations that are hindering progress in the market.
In the man versus machine game of ancient baduk, Google's AlphaGo has inspired both awe and fear. As experts go on to analyze the strengths and weaknesses in this round of matches, Korea faces a long journey ahead in developing its own artificial intelligence. Eunice Kim, Business Daily.
Expectations are growing over rising global oil prices, that prices might have bottomed out already. But is that really the case? Take a look.
The nosedive in global crude oil prices appears to have stopped, at least for now, with prices currently hovering around $40 a barrel from below the $30 mark seen earlier this year. The crude markets were buoyed after the world's two biggest oil producers, Saudi Arabia and Russia, agreed to freeze oil output at January levels. A bullish outlook from a report released by the International Energy Agency on Friday has also fueled optimism, as it suggested prices may have bottomed out. Crimp production from U.S. shale oil companies has also fueled expectations. But not all believe this upturn will drive prices back up to the $100 level companies once enjoyed. While major oil producers will meet later this month to complete output talks, Iran is largely forecast to remain reluctant, as it will aim to rake in profits from its recent sanctions lift.
And to tell us more about this, Professor Jung from the Catholic University of Korea joins us in the studio today. So good to see you, Professor.
Happy to be here.
All right, so recently we've been seeing the prices of crude oil and commodities go up. What's the reason behind this latest jump in prices?
Okay, well, the oil prices have gone up from $26 per barrel in February to $40 per barrel now, so that's a rapid rise. But we're not quite sure if this is a permanent increase. Now, some of the factors behind it is that countries like Saudi Arabia and Russia have agreed to freeze their output, and then some countries like Nigeria, UAE have experienced outages in the last few weeks. We're not sure if those outages are going to be permanent. Also, there's some speculation that perhaps this is due to short selling. A lot of people expected the oil prices to fall further, so they short sold futures in oil, and now they have to try to cover themselves by buying oil. So a lot of people believe that this is a temporary event rather than a permanent trend. So there's a big conflict there between some analysts.
Then how exactly does the U.S. rate trajectory influence commodity prices?
Okay, well, we were initially hoping that perhaps this is a sign of a recovery. The U.S. figures have they've not been that good in figures released in January, but figures that was released in late February have seemed to be good. They seem to indicate that U.S. recovery is taking hold and it's stronger. So we were hoping that perhaps the rise in commodity prices, not just oil, but in things like iron as well, is a signal of that. But we're not quite sure yet. But also, another interesting factor is that a lot of people believe that if the commodity prices continue to rise for the next month or so, then, if you look at the consumer price index of the United States as well as Korea, one of the reasons why the consumer price index inflation is so low is because of the low oil prices and commodity prices. And if these prices begin to rise, then the inflation will almost reach the target rate set by the United States, around 2%. So a lot of analysts believe that if this increase in commodity prices continue for the next few weeks, then that'll give justification for the Fed to raise its interest rates, perhaps not in March or April, but perhaps in June.
All right, then falling commodity prices, I guess we could all say mostly stemmed from China's slowing economy. But recently at National People's Congress meetings, China announced this new growth target, right? So do you think this could have had a positive impact on the prices?
Well, the Chinese announcement, I think, did have a bit of a did add to some of the rally. But until the Chinese government and Chinese economy shows that they can achieve something close to that target, I'm not sure if this rally will continue. So again, there's a big conflict over analysts on whether this increase in prices is a trend or whether it's just something that will happen for the next 2 or 3 weeks and then fall back down again.
Right. Well, let's talk more about global oil prices then. In the beginning, when oil prices began to rise, Korea thought that it could benefit a lot from it, but it actually didn't end up being that way. What was the reason behind that?
Okay, well, the problem with the oil price rise was that at least in the beginning, Korea had a lot of oil stock, which they bought at very high prices. But because the oil price spot prices were going down in the global market, they had to sell products made from that expensive oil at a cheap price. But the Korean petroleum companies did sort of recover as the purchase price of raw crude went down. Now it's sort of the opposite effect. They bought a lot of oil at very cheap prices, and now they may be able to sell it at high prices. So at least until the Korean companies have to buy those raw crude prices at expensive prices again, they will make some profit out of this. So it's a mirror image of what was happening when the prices are going to fall. Now, this assumes that the price increase is permanent. If the price increase is not permanent and it falls down in the next few weeks or so, then, nothing changes.
Right. I know you talked a lot about this before, but some people are actually saying that because we've seen the worst of the commodities bear market, that this latest jump in prices is nothing to be too excited about. What are your thoughts on this?
Okay, well, it's very difficult to see where the equilibrium price is right now, especially for the oil, because during the 2000s, from 2000 to 2015, oil prices have been almost continually been rising, except for the short time during the global financial crisis. So it's not very clear where the price should settle. Having said that, though, if the price goes up slowly to about $40 to $50 level, if it goes up a bit higher than this, I would be happy. I would not be happy seeing the prices rise very quickly again. Or prices fall, but if it rises little by little gradually to about $50, between $50 and $60, I think I'd be happy.
All right. What kind of impact did this latest surge have on the Korean economy then?
Okay, well, Korean economy, we haven't really seen anything hit the Korean economy yet because the price rise has been so recent.
Right.
If the trend continues, then Korean imports, at least in dollar terms, will rise. So our trade surplus may fall, but that may actually be good news if the oil price rise is due to a demand increase. Now, most of the problem that Korean economy and the global economy has been having is due to low demand, and if the oil price increase is driven by increasing demand and global recovery, then that also means that our exports may rise. So if this is really an indicator of global recovery, which is somewhat doubtful at the moment, but if this really does signal a recovery, then it may signal that our exports will rise. So our trade deficit or trade surplus may fall, but with the rise in exports, we may have more jobs, so it may be good news.
Right. Okay. Well, now what are some factors or events that we should keep a close eye on that could affect commodity prices in the future?
Okay. Well, basically, all the hopes are riding on the United States and China. United States recovery seems to be holding, but as I mentioned before, January figures are not very good. February figures were very good. So even there, you have mixed results.
Right.
So we need to keep an eye on whether the recovery will stick and whether the increase in the commodity prices and the oil prices is not just a very short-term event, but whether it constitutes an upwards trend. We really haven't seen the prices too long. So we're hoping that this is a trend, but we need to keep an eye on it. Also, the second thing is, as you mentioned, China. With the global financial crisis and the current slowdown, it's very important to see that Chinese economy has really become another pillar of global growth. So if the Chinese economy doesn't fall back and United States recovers, then that's very good news.
Right.
But if the Chinese economy does worse, as it has been in the last couple of years, then, well, the oil price and commodity price rise is likely to be just a short-term peak.
All right, let's hope for the best in the future. Thank you so much for coming in today, Professor.
Thank you.
And that wraps it up for today. Thanks so much for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.